day all. Ira Epstein of Linn Associates with your agriculture update and we are now on Thursday, and this is the 20th of June 2019, and I'm about 5:20 in the afternoon. So the grain markets are closed, and you can see this market just soared today. What's going on in the grains is pretty simple. The dollar is falling. You have lower U.S. interest rates, you have a soaring stock market, and at the same time we have true weather markets. And that's really the story in the grain markets. The 10-day forecast full of rain in Indiana, Illinois, parts of Indiana, around the Chicago, and further down had 2 inches of rain yesterday. So imagine the farmers trying to get into the fields, number one, to plant the remaining soybeans. As for the corn that isn't planted, it's not going to be planted. As for what's in the ground, how much of it gets washed out. And then the later you plant, remember, we have summer solstice coming, and that becomes the most sun we're going to get. Then it starts diving down. This is the real bull market. You don't see them very often in grains because you get false starts on weather almost all the time. But this one's very, very different. When we take a look at soybeans, you can see that the settlement today was 915.5. Now, if I go to a weekly area chart of just closes, you're in a resistance area that peaked itself out last time in the 925.25 area. Between there up to the next resistance of this area is the $10 mark. So that's probably a number you're going to hear a lot about from people that want to talk the weather situation and where beans might be headed. In looking at the charts, without today's action, you had a gap in the chart. The market today reached down, and as the forecast kept coming out, the market looked around, and it went from a low of 922 up 20 some odd cents, closing sharply higher near the highs of the day at the 941 level. But it filled that gap. This gap was filled. This is the gap not filled, and don't know if it will be now that the market's moved up from there $1 away from it almost. When I take a look at what the market's doing in terms of the swing line, today's action was important. When you see an outside day up, and that means you took out the previous day's low and high. In fact, I can show it here much easier for you. There's the low and high. The one thing you don't want to see is the market take that out anytime soon. If it takes it out the next day or even on Monday, for example, I'd call that a trap for the bulls. The important thing will be to see if the market can get up to these highs that it made right here. And that high was 948, and what it does is if it gets up there. So swing line up, that's the number I don't want to see taken out. Moving averages, you see the 18-day average is rushing towards the 100. It's not there yet, but it's going to take an awful lot to stop it from crossing over and give what's called a bull signal. So I'm going to look for support on pullbacks in between this 915 to 908 level, which is a big number. This market has just rallied from 875 to 948, and today was another outside day up. The resistance comes in right before this high of 948 in the neighborhood of 946 in the Bollinger Band. If you go back, you see that Bollinger Bands, especially when they got a wider pattern than this, and that's pretty wide that they're at, they offer a level of resistance. Can you blow through them? Of course you can. But the odds favor the market will have some problems there. Is there anything bearish on this chart? No, there isn't anything bearish. And momentum is even locked into what we call an embedded reading in the slow stochastic. So until this level, this if you will, this thrust is over, it's not over. And I look for the support to come in on breaks. In the meal market, the one thing that bothered me up till 2 days ago was the fact that the meal was having a pattern of these lower highs and lower lows, and it had pulled back to the 18-day average, and momentum had turned down. Today's action changes a lot. In order to have a bull market, typically, and I use the word wrong, it's probably not in order, but often what happens is meal leads the way over the soybean oil market, and oil's been actually gaining on the meal. Today the meal market was up for all purposes here $6. Soybean oil was up 22 points, so it's $600 versus $120 of gain if you were 1-to-1 against each other. That doesn't mean you can't go higher in the oil. Oil's playing a catch-up game. It was the weakest of the crowd. It's now being dragged along. You had an outside day up here, just like you had in meal and just like you had in beans. So the markets that reach for today's lows anytime soon are telling you a sign that they're the weaker of the group. You're also overbought in this market, and in slow stochastics in meal, they're just trying to turn up right now. In the corn market, in Dees corn, we've had an uptrend with higher lows, higher highs. The market made a run today towards the 18-day average. When you lose an embedded reading, that's often the case. You've lost the embedded reading. You have an overbought condition that at any point can start faltering. I still look for resistance at the upper Bollinger Band at 469. In the wheat market, you have the pattern of higher lows, higher highs. Bullish, but momentum has got divergence, just like in corn. While the markets were up today here, and they had a nice rally if you look at it, you're up 5 cents, it's not doing what the soybeans did, and the reason for that, it's the beans that are now in the most immediate danger. The corn's got plenty of problems, and we'll probably see the corn market, as the summer goes on, start telling you about those problems. But today it's a question of how do you get the beans planted in order to get a problem with the planting, and you don't have it. The situation's so bad that the government stepped in today, and if you put acreage in to prevent planting, which means you're going to get your insurance and so on, normally you can't go back to that acreage and do anything until towards November, December. They moved that up to September 1st now so that farmers can go in and hay and whatever else they're going to do because of the floods and the terrible, terrible rain that just doesn't stop. In the sugar market, you've got the market losing an embedded reading. And you had it embedded yesterday, you lost it today even though you were up. Odds favor price and the 18-day average are going to come together very quickly. That's what the odds favor. You settled at 1268. That number's only 1263, so I don't want to give you the impression that's a big deal. It isn't. But a settlement under 1263 turns the trend of this market back to lower highs, lower lows, and that switches the trend of the market if that occurs, at least on the chart at this point. In the coffee market, you rallied up to the resistance of the 100-day average in the 18 and ran into a brick wall. Now, the problem is, I don't know how aggressive the bears want to be. You're oversold. If the market wasn't oversold, I'd say they're going to be more aggressive. They weren't because I think they're looking at some indicators that are saying this market's oversold. In the cocoa, you saw the loss of a trend. Let me take off today's action. You had higher lows, higher highs. If you take out this number, 2448, and settle under the 18-day average, you create a pattern of a lower high and a lower low. The settlement today was 2446, under 2459, so until this high is taken out, with momentum turning down, I think the bears made a pretty big attempt to grab control of this market again. If they can drive it to the downside, you have two levels of potential support at 2359 and 2340 with resistance at 2459. In the cotton market, cotton, I've been wondering when cotton was going to realize the weather for the cotton isn't all that bad. And the market's been pulled along with the other grain markets. Admittedly, it's not a grain, it's a fiber. But the acreage and other areas, people look and they say, well, if it grows, maybe if the others are in bull markets, this will be. I think the market today had a big problem. It got as low as 65.61, which takes it right, see this low here? That low was 65.68, so it broke that low. You stepped out of the uptrend is my point. The market's got a pretty defined Bollinger top and bottom. It's probably going to have to spin around in there for a little bit. In the cattle, there's a cattle on feed report tomorrow. So a lot of traders are probably stepping away, but the trend is down with lower highs, lower lows. That trend gets negated if today's high gets taken out tomorrow or Monday. So I'd be watching that, and there's a clear battleground. It's the 18-day average of closes as this market's been trying to figure out what to do next. In the feeder cattle, you have a neutral market. You have a lower low, a higher high. You got up the other day, as I was here talking about, to that 18-day average, which has been acting as a zone zone of a lot of resistance in the market. Once the market back here in April got under that price, and it has stayed basically under it for a long time. So those trying to pick a low in this market have a good time. Let the market tell you when it bottoms, and it might do it off this cattle on feed report. You never know. In the hog market, even though U.S. and China are supposed to talk and the market's all excited about that, you're not seeing it in the hog market. I doubt that you'd see it in the August. It's probably the December on back months that you would get that from. But the U.S. and China are not yet in agreement on anything. Tomorrow's a big week. We'll deal with it all then. As you can see, as I said, the markets are opening a bit lower tonight. But one of the things I'll be doing in the morning is talking to my subscribers. Now, even though I missed some work yesterday and I couldn't put out the updates, my subscribers had my morning video today. I made sure that that was out. And when I put that out, what I try to do is I cover the markets in sectors for you. The idea here is that if you're looking for an idea, or you have one and you want to see what somebody else thinks about that, I cover these sectors in this exact fashion each and every day. And you can either move your cursor on the bottom and it'll light up what sector you're over, or there'll be a lexicon right here. The difference of these videos is they're meant for the in and out trader. They're meant to give you an idea, buy here, sell there, exactly what to do, where to put your stop order, and I'll say buy here, sell there, whatever I see going on. The reason I can do this in that video and not the one you're watching is it's number one, user ID and password protected, and it's a subscription video, so it's private. It is not available to the public. How do you get it? Give us a call, 866-973-2077. You can go to our website at www.iraepstein.com. Under the word education or market research, it'll take you there, or you can click up here. If you're watching me on YouTube, it'll take you right to that page. I'm Ira Epstein. Have a good day.